Good afternoon, everybody, and welcome to our blockchain and crypto series. Today, our special guest is Shannon Robnett. Shannon is a second generation builder with fourth generation realtor with over 250 million in personal transactions. Shannon is an active syndicator in many markets with over 100 million in assets under management. Shannon is also building out a digital securities platform for investors and syndicators to create wealth and liquidity using blockchain technology. Before we get started, I would like to go through a small little disclaimer. This session is strictly for educational purposes and should not be considered as a legal, accounting, or investment advice. This session does not represent an offer to sell or a solicitation for an offer to purchase an investment or a security. The strategies mentioned in this session may not be applicable for everyone. The information presented is believed to be accurate and reliable. We make no representations or warranties, expressed or implied, as to the accuracy of such information, and we explicitly disclaim any and all liability that may be based on such information and/or error or omissions thereof. Please consult with your own attorney, financial advisor, and CPA for legal matters, investments, and specific tax situations. This session is strictly for knowledge sharing for educational purposes only. Shannon is a blockchain enthusiast and he's disrupting the current real estate market. Welcome, Shannon. I'm so delighted to have you on our show.
Thanks. I'm so glad to be here. Appreciate the opportunity to talk to your audience.
Thanks. So I wanted to start with this question. How did you get into the digital side of the real estate, or how did you get interested?
Well, I didn't really understand. I remember, I think like most people, when I got in front of Bitcoin and cryptocurrency, 7 or 8 years ago, and I didn't quite understand it. And I was trying to figure it out. And I realized that it was a lot like title. It was a lot like a title chain that, it sold from John to Sam to Sally to Sarah, and they subdivided this and they did that. And I started to see the similarities. And so I just kind of sat back and watched and waited. And I got involved at a hobbyist level with crypto and everything. And I saw how people kind of got confused with what cryptocurrency is, what blockchain technology is, and what really honestly digital securities are. And so I just kind of started down that road, and I started to see how, especially in a syndicator space where we're taking, 30, 40, 50 investors, we're keeping track of documents, all of this stuff can be managed on chain with that technology in a distributed ledger, and how it could make my life simpler. So I really got heavily involved in this because I'm lazy.
That's good. You said 3 things. Those are the main topics for today's conversation. You said blockchain, and the second thing you mentioned is cryptocurrency and the security tokens. How would you describe in your own words, what is blockchain, what is cryptocurrency, and what is the digital or the security tokens?
Well, and I think that my own words will infuriate a purist, right? But I relate things to my reality, what I know. So I know that there's this company out there called Microsoft. And Microsoft, until it created the Surface, did not create one physical thing, right? It created software, right? So I kind of look at Microsoft as like blockchain, right? Mm-hmm. Mm-hmm. And then everybody took and they said, well, no, Microsoft has these shares and it's worth money. And so then they created currency out of it, right? They created stock shares. But see, the only reason that this is worth $10, this is my allowance for the whole month, by the way. The only reason this is worth $10 is because you and I agree that it's worth $10. And then I go to the store and I have to get an agreement with the store owner there as to what I can buy with this. And that's where people have taken the blockchain technology and they've used this cryptocurrency adjective name to it. And they've said, well, this is now, why could you ever believe that this is currency? Same reason you believe this is currency. Didn't cost $10 to make. There's not $10 backing it up, right? And depending on which convenience store you go into, it may or may not be worth 3 hot dogs, right? Now you take that technology of blockchain, and when you take it to the digital security world, that distributed ledger is really what we're talking about. Mm-hmm. And if you take that and you say, well, what is the New York Stock Exchange? That is a digital ledger of shares of this company and that company and all of this stuff. And everybody has access to that, right? And so now everybody sees that, but not everybody has access to the actual moving parts behind it. That's what digital currency, digital securities do for us, is they allow everybody to see what's behind it. So they can see that you own 100 of these and I own 200 of these and I own 20 of those and you own 60 of those, because everybody can see who owns it. They don't know what you paid for it, right? But when you start talking about digital securities, you're talking about more than just the tokens, which are the shares. You're talking about the smart contracts. You're talking about how all that stuff interacts and how things are getting done. And I see the beauty of that when it relates to syndication as such a way to simplify how all this works, who all does what, who all knows what, and how we get in and out of these deals, because that is what everybody wants to know. And that distributed ledger creates that opportunity.
Great. Oh, wow. That's a good explanation. I like that. So can you walk us through your project? How you got started and what it looks like now and what it's going to look like in the future?
Sure. So what I looked at, and as you know, when you're doing a syndication, you're usually doing either a 506B for friends and family, substantive relationship with the person, or you're doing a 506C that allows you to advertise, but you have to have accredited investors. So the first thing that I wanted to do is I wanted to take care of that question of how do I know that you are an accredited investor or that you're looking at the right deals? And so the very first thing you do, if you go to our website, myverticalequity.com, you'll see that you'll have to do a KYC AML. So you'll have to prove that you either are or you aren't an accredited investor. The great news is most of the deals that are on there right now are 506B. So being an accredited investor isn't necessary. But what I wanted to see was a platform where a lot of syndicators could get on there and they could put their deals up and everybody could look at the different deals and they could decide what they wanted to do. And so I made that KYC AML transferable. So if you come to our platform and you put in your information and you go look at my deal or you go look at your deal or anybody else's deal, that information travels through there as needed so that when you decide you want to invest in this particular project, it takes care of all of that information, it takes care of all your banking information, all your wiring information, and all of that. So now that we've put an asset on there, we've raised the funds for that and we've tokenized that. All we've really done is we've taken all of those paper DocuSign PPMs and we've locked all them together. We've put them in a smart contract and we've distributed a ledger of who has what shares. Now that smart contract also has some other basic, it's called a smart contract, but let's be honest, it's not really that smart. It only does what you tell it to do. And currently all we have it doing is locking it up for this period of time and this period of time and this period of time, right? Well, the SEC says that to avoid the appearance of money laundering, if you're getting into a 506B or a 506C, you have no liquidity for 365 days, 1 year. But after that, there's a lot of people that are involved in deals that would like to have some liquidity with their tokens or with their securities, because that's what they bought was a security. But all of that is in the hands of the GP or the general partner. And I started to look at that because, the reality is, as I talk to people, not every deal fits a person. And there's a lot of deals that people like parts of it. Like, my dad and I are very different investors. My dad just wants cash flow. I just really want appreciation.
Mm-hmm.
And so when I look at a deal that's a value add deal and we're going to buy it, we're getting a great price on it. We're going to fix it up. We're going to paint it. We're going to get it all ready. And then we're going to put it into service as a cash flowing asset. I start to look for another deal. Well, if we've got a long lockup period on it where we're going to be getting that cash flow, I'm really going to get bored. And my dad really doesn't want to be involved in the front side of it. So I started to look at how to solve that liquidity problem and how to make it so that after a year, when all of that appreciation's done, how can I get out of the deal?
Mm-hmm.
Well, there's not a general partner on the planet that wants to handle the paperwork, that wants to deal with this and deal with that and file this and file that and then find you a buyer for it. So I created a platform where you can go to that platform after that time period is up and you can market your securities for sale. Mm-hmm. So now you've got this digital asset that maybe you decide, you know what, this thing started out, I put $100,000 in it. After everything's done and everything's looking beautiful, it might be worth $120,000 and I want to sell some of this and I want to go into another deal. You have that opportunity to do that, right? But from a syndicator's, from a general partner standpoint, there's nothing for me to do because the blockchain technology tells me everything. It tells me that you sold it and it tells me that you sold it to Sarah. And it tells me that Sarah sold part of that to Mike, right? And so all of this stuff is very simple for me. So when I go to do my distributions, it just simply follows the chain and gives the money to who it's supposed to give it to. So it simplifies from the syndicator standpoint, all of the complex complications or computations and math that would happen if any movement happened in the deal after it was inked, right? And those are kind of the starting points of what we started out with and what we've built so far. We've got so many exciting things coming that I almost pinch myself at all the stuff that's coming because this is the basic, not to coin the phrase, right? But this is our Genesis block, right? What you go to our website at and look at right now is the very first deal being tokenized that will happen by the end of this month. We will tokenize an asset. Out of that, we will begin to bring DeFi to the deal. We're looking at ways to bring tokenized financing. There's all these different things that are going to be available that are already happening in the world of cryptocurrency, right? By the end of the year or first quarter of next year, we should have our platform tied directly to Coinbase. Mm-hmm. So you'll be able to move funds in and out of Coinbase to our platform, buy securities, liquefy, move back into Coinbase. There'll be a lot of that that's going to be going on. And we're right on the cutting edge of how all of this is coming down and where all this technology is really, really going to take us. And it's super, super exciting.
Wow. I have tons of questions. You threw out so many nuggets. So let's start with this first. You said 506C and 506B. So are you doing 506C now? That's what I understand, because according to the SEC rules, it's okay to advertise. Or can you do 506B as well on the digital platform?
So on the platform, we are advertising the platform. Mm-hmm. We're not advertising the deal.
The deal. Uh-huh.
So we are advertising the platform. And then we're doing, currently our first offering is a 506B. I like to do 506Bs because I like to level the playing field. Okay. I like to let other people in. I like to know who my investor is. I like to take the time to invest in a relationship that gets to know the people. Mm-hmm. So that's kind of been our thrust on that deal. We will be bringing on 506Cs. I have a lot of syndicators that we're talking with currently that have assets that have been, they're 2 years old. They've still got 2 or 3 years left. They've got some rumblings in the market, rumblings in their group of, gosh, we sure would like to sell this. They're looking at bringing it to the platform so that we can liquefy that for them and allow people to make those decisions as to whether or not they want to create some liquidity for themselves out of the value that the project has created over the last couple of years. And so there's all kinds of things that this does for that, right? And so it depends on what you want, but the platform is agnostic. The platform, as long as all it does is if you are not an accredited investor, it does not allow you to see the 506C offerings.
Oh, interesting. So You're saying you're advertising the platform. So it means you're allowing other syndicators to come join the platform too and put their deals?
Absolutely. So we are going to be vetting the syndicators. Our goal is to make sure that, look, we really wanted to create something that was like CrowdStreet and Coinbase had a baby, right? So that you've got the ability for syndicators, because as you know, there's a lot of syndicators out there that are really good at underwriting. They're really good at finding deals, but they're really terrible at picking partners and raising money, right? We wanted to be able to create that opportunity for them. The other side that we see a lot too is there are people out there with really great ideas and really good deals that don't have the seed capital necessary to purchase all their documents and to get everything done and get their PPMs and get their OMs and get all of the documents done and get all this done. So as we have a monthly model, it's designed for you to get started at a lower price and pay as you go, like a subscription agreement for all the time that you're on the platform. As long as you're using the platform, there's going to be a fee. If you're not using the platform, there's not a fee. But it allows people to get on the platform and then be exposed to other investors that are looking for your type of product, right? So it's going to take a lot of that simplicity, or it's going to simplify the fundraising part of it quite a bit. The other thing that we've done is, you spend a lot of time and effort advertising who you are and what you're doing and how you're doing it. And so do I. And so do a lot of syndicators in the world. If we're coming together, we're actually advertising the platform in a communal aspect. And so we're able to put 10 times the dollar amount behind the advertising that you or I would have individually be able to put there. And so as that goes, we will drive more and more traffic to the site, and people like CrowdStreet, their biggest number in their budget is advertising. And they've done a very good job of bringing people to the platform that allows people to see what there is offering out there. And they've done a myriad of different offerings, and there, there's mixed reviews about the platform. There always will be. But the reality is that's what our goal is to create a platform where syndicators and investors can meet, get to know each other, see the different deals, see the different offerings, and at some point choose to conduct business, and at some point choose to create liquidity based on what the individual investors' pro forma timeline is, not necessarily being at the discretion of the GP only.
Interesting. So it's just like some of the platforms that we have in today's date, those are not digital. So your differentiation is that you're digital. And plus, is it SEC compliant that you're doing 506B on your platform? So SEC has no issues with that?
Nope. We have been through all of that. We're working with a couple of great attorneys. We've got a transfer agent that's involved in all of our setups. We are working, honestly, this is one of the things that was my scariest moment, right? I mean, anytime somebody uses a governmental three-letter acronym, we get scared, right? CIA, FBI, IRS, SEC, these are terrifying acronyms, right? Even Homeland Security, right? I mean, so we have these people that we've been working with that are very, very familiar with the digital space, that are very familiar with the SEC. We've brought in all the big guns. We've spent all the money doing all the research that you would have to do, or anybody else would have to do. And so we've done all that, and we've put the proof together. We've actually been involved with opinion letters that have been written, so that we're creating the case studies that show exactly what's going on. So we're going to, and we're engaging the SEC and FINRA and these guys, so that we know that we're not running afoul of any of the regulations there. We're actually coming to them and saying, hey, how can we do this to be 100% compliant? Because we want to make sure we don't run into any issues later.
So is there like a special kind of regulation out there? Like you are just advertising your portal or your platform. You're not necessarily advertising the deal?
Nope.
If that's what the take is?
Correct. And so when you're advertising the platform, you're advertising an opportunity for syndicators. And I mean, look, you can tell people, if you'd like to know more about syndication, come talk to me. And that's really what we're doing, right? We're not advertising that we have a deal at 125 Jump Street, right? We're just saying, come talk to us. We are a place for people to meet. But the other side of that is our biggest focus right now isn't necessarily to go out and meet investors. Our biggest focus right now is to onboard, and we're in the process of onboarding some large syndicators that have hundreds of investors that are looking for liquidity. And by bringing it to the digital platform, we create the mechanism by which they can offer their investors some liquidity. So one of the things that you know is that DeFi is really, really popular, right? And DeFi is just decentralized finance, right? It just allows me to have something of value that you and I agree is worth X. And we're going to finance that. You're going to give me a loan against my X, whether that's Ethereum or an NFT or a digital token that I own a piece of real estate in Idaho. And you're going to give me a value because we agreed on that value, and you're going to give me a percentage of that value. Now think about this. I've been in your syndication now for 2 years. You, as a syndicator, have done an amazing job. We bought a phenomenal asset. It's now worth $200,000 for my share. And we're talking in fiat currency, $200,000 in fiat that I only paid $100 for. And so I go to a DeFi specialist and I say, I would like to get some financing on this. They say, well, we know what's going on in the Sacramento market. We got a pretty good idea of what's happening. We'll give you 65% of the value. And we agree that the value is $175,000. Well, that sounds pretty fantastic. So I'm going to be able to DeFi that, create some liquidity for myself, but not a sale for the IRS. And I'm going to be able to go over here and I'm going to be able to invest in your next deal. And by being able to do that in a syndicator's own portfolio that they currently have, we're going to free up massive amounts of liquidity for their investors should they choose to, which really also goes to what digital securities and blockchain is all about in the first place, which is disrupting finance, because now we're not going to use a bank to refinance. Everybody's going to be able to do their own little mini refinance inside their self if they choose to. But like my father, who never wants any leverage, he's going to leave it all alone, right?
Right, because he wants the cash flow. Okay. You mentioned KYC and AML. Can you give us a little bit explanation on that, what that is, or how you're making that work?
Yeah. So I wish I was the guy that came up with this protocol, because that really, KYC is really just compliance and verification, right? And we have contracted with a company that does this, and they outsource this for us. But really, it allows us to take care of all the requirements of all of the information gathering inside a platform that we didn't have to build. So we use a company that integrates into our website, that integrates into our programming, that takes all that information. It does a transaction monitoring. It does a customer risk rating. It does our regulatory filings. It does a database check. It does all the things that we're required in doing, and make sure that that's all squared away, locked up tight, before you have access to something you shouldn't have. So now it's not up to me to go, oh yeah, no worries. I made sure that I had all their verification before I showed them anything, because you provided the verification. It also puts the burden back on you. So that's really what that is. And, by definition, I look at KYC as more like cover your keister, right? It's really about taking care of making sure that we're compliant.
Yeah, some like know your client kind of thing. And then, all the banks use that too, the financial industry.
Correct.
So AML is anti-money laundering. So
Correct.
What is being done? That's the team that you hired. They take care of that too. So the money is coming from the right source and all that. But my question is, how would that affect, because now we are going digital. It's like a cryptocurrency, because the fiat currency, whatever the investor got, they got to convert it to the digital or a crypto in order to invest or purchase a security token that you're selling, right?
Yeah. But when we've done that, we've verified that you are a real person, right? That AML process, we've run you through the databases. We've done the double checking. Look, I understand the sweet old lady from down the street doesn't look like she's laundering money, right? But the reality is most people get in trouble because they don't know where to go to check. Think about this. Do you really run an anti-money laundering checklist on the people that are involved in your deals, well, where would you go, right? So for us, it's easy to just outsource that, get with a good and reputable company that takes care of that and does it for us and does it a lot better than we were able to.
That's good. So does that satisfy the investors that are investing in 506B? I mean, does that comply with the SEC requirements that way?
We start with that because then we have their basic information is locked in, and then we make sure that we have that substantive relationship with them. And how do they find us? We've got some documentation in there that backs it up that says, hey, this is where we got involved. This is how long we've known each other. We started dating back in 2016. You were my neighbor down the street. I used to mow your dad's lawn. I mean, whatever it is that we need to do to create that. We met at this meetup. We've had these conversations, and we do a lot of that to make sure. But the other thing that's beautiful about this is that we have an ability to put all of those documents in there. So if we met on LinkedIn and we had a Zoom call and we got to know each other and we started creating this relationship, I would be able to log all of those Zoom calls that I recorded into the software so that I have all of that taken care of for compliance and I never have to really be involved in it.
Great. And the other question I have for you is you talk about the smart contract. So can you elaborate that too? How much is in the smart contract? Because the way I understand smart contract is just like it has set of rules and then it validate those rules and execute them, right? So basic information, like only 3 steps, like a basic language. If you go back into, the basic language days when we started with the computer. So kind of similar scenario. So can you elaborate on that? How does this smart contract play a role in your deal? Because we have this huge lengthy PPMs or the operating agreements or the company agreements or the agreements with our investors. How would smart contracts satisfy those?
Well, and that's where you can tell me everything you want in the smart contract, right? So we can do some basics. We can do that. You're going to start paying your investors when you reach a certain amount in your checking account, right? You can do that. We're going to sell in 5 years regardless. You can do whatever you want to program in there. But there's some other things that we've got coming on, and where there's some other companies that we're working with these other companies, AI, and names like CBRE and FLL to create a mark-to-market or a monthly appraisal of everything that's happening in your deal. How exciting is that, right? Where I'm going to be able to say, hey, I looked at your NOI, and based on what's happening with your area and based on the 4 appraisals that we've seen and based on the comps, we now think your apartment complex is worth this. Oh, and by the way, nice job raising the rents and doing all the other things that you said you were going to do. So now we have third-party verification for you on month 3 of your deal. Oh, and wait, now we're 6 months into your deal, and we can now see that you've raised rents again, and you've done some more, you've spent more money because we have all of the receipts in the AI, right? That the artificial intelligence is reading it and putting it on chain. And there's a side coin that goes along with this that creates that has basically all of the ability to continue from where your due diligence left off to your ownership took precedence, your title reports came in, and every single invoice that happened from there. Think about that, what you could do with that as far as creating a living ledger of what did you spend this on. So now when you go to sell your property in 5 years, you're now looking at it going, oh, I remember when we had that break in the sprinkler line over here. I remember when we had this unit here that had mold and we remediated, and here's the contractor, and all of this is locked in. But it also, with that AI, goes onto your, it looks at your balance sheets, it looks at your general ledgers, it looks at how things went, and it says, by the way, your property is probably worth this. And CBRE or FLL is coming in from a third-party outside vendor and looking at it and going, we think that it's worth this based on the cap rates that are happening in the area. So now when you go to your liquidity part, I know this is so exciting, right? Now when you go to your liquidity part, you're able to give a mark to market of what your people are able to do with that information and put that out there when you're trading, kind of like a PE ratio with a stock.
Exactly.
Right?
That's what I was going to say. Yes.
So we're creating all this crazy stuff, but it's all there and it's all on chain. And so that it's all on a distributed ledger so that you're able to look at it and I'm able to look at it and everybody's able to look at it and get that same information and then be able to make intelligent decisions about what they want to sell, what they want to DeFi, what they want to do with their position in the digital security space. It's amazing. I love it.
It is. Seriously, yeah, I love it too. So it's just like you can basically see your shares going up and down, the price of your security token, just like in the stock market. So when I think in a bigger picture, it's going to be like a stock market that we have in today's date with fiat currency, but it's like a more digitized version of the syndication. So it's just like,
think about this. Think about this with our integration with Coinbase, which should happen by the end of the first quarter of next year. You're going to not have to think in fiat, right? You're going to be able to look at that, and this platform will go, yes, fiat. So you bought $100,000 worth of this deal. It became worth $150,000, and Bitcoin is worth $50,000. So now your tokens are worth 3 Bitcoin. 3.2 Bitcoin, 3.7 Bitcoin. And you're going to be able to make that transaction in your head. So now, again, one more step of decentralization. You're going to be able to go back and forth, and it'll probably have to go through a UST originally. So you'll go to a stable coin to make the actual transaction, but you'll be able to come in and out of the platform. DeFi will be able to come in and out of Coinbase to you, to the platform, take care of the lending situation, and then move back out. It's going to be crazy what is happening. And I'd love to say that we're the only ones in the space, right? Like Facebook was really the only one in the space. I mean, they were doing some amazing things. There's a lot of people in the digital space that are doing this kind of thing with real estate. We just happen to have our own little spin on it.
That's good. So what is your coin? Is it like, are you merging with the Bitcoin, or you're creating a fork from the Bitcoin?
This is the crazy thing. Your asset will have its own coin. Right. So we will have, we're getting ready to do one, and we're going to call it the airport coin. Right. Why? Because it's the airport plaza, which is the asset underlying it. And then when we do our next syndication, that's going to be at Greenhurst. It's going to be a 60-unit apartment building. Hopefully we'll come up with something a little bit snazzier than the Greenhurst coin. Right. But we're going to create a coin, a token, a digital security for each asset. So that you'll be able to trade your asset through UST for another asset should you want. You'll be able to trade that through and go to UST and then go to Bitcoin or Ethereum or whatever. So you'll be able to move fluidly through the digital security space into the crypto space and back again through blockchain technology.
So as long as you're holding to the security token, is going to be the coin that's associated with that particular property or that particular security, right? But once you liquidate it, you can go to the stable coin like USD, or you can go to Bitcoin or Ethereum or whatever. So one question came to my mind. I was like, okay, if you're converting your coin, that's why I asked you, did you convert your coin or did you fork from Bitcoin? Because I was thinking that if you fork, or if you converted or merged with Bitcoin or Ethereum, because if people are holding on to Ethereum and the Ethereum price is going up too, and here the property price is going up, that's going to be super crazy scenario.
Right. So I'm sure that at some point in the future, we'll have that staking market, right? Where you're going to, I mean, I think you're going to see people that are going to be pulling money out of their real estate tokens to stake Ethereum. And people pulling out of their Ethereum tokens to stake real estate, right? So I think you're going to create a sub-market there that's going to have its own benefit of what's going on with everything based on what's happening, right? So there's all these things that come out of it that are going to take it in crazy directions. But the reality is that right now, the digital currency market is enormous, right? I'm going to pull this up here real quick. Crypto. Because I don't want to misquote it, because the reality is that the digital market is set to be, it's projected to reach $1.7 trillion by 2027. Am I saying that right? I'm reading this online. So if it's on, you got to believe it, right? But the reality is we're set to go to $1.7 trillion. Do you know that in all of the digital security, or all of the PPMs and all of the securitized offerings, whether that's a syndication like mine or another security, that there is $2.1 trillion locked up in those right now. You have 1.7 in crypto. You have 2 trillion in securities that are locked up. What if you liquefy and allow those to merge? Mm-hmm. That's where my head just goes boom, because I'm sitting there looking at it going, wait a minute, we're creating that platform. We're creating the ability for you to bring me an asset that you have all of these paper contracts on that you signed on. And the greatest thing that you've done in your PPMs lately is you've gone to DocuSign, right? That's really the only technology advancement that's happened in the last 20 years with this. Now you're going to bring it to me. I'm going to create a digital solution for that that's going to allow you to watch people do these trades wherever, whenever, with or without you. And now when you go to distribute your cash, it's going to follow the chain. It's never to worry about what you think. You're not going to need to keep up with the ledger because the distributed ledger is now taken care of by their transfer agent. You know exactly what's going on, and you've got all the compliance.
So you're saying it's an inbuilt AI that's doing all the computation, and then as many times the security token is divided, is going to be creating those kind of shares depending upon how much anybody owns. Like, let's say if somebody put 100,000 and later they decided they wanted to just sell the 50,000, and now the security token has now 2 portions, right? And then again, somebody who bought it 50,000, they say, okay, I wanted to sell the 25,000 off of that. So there's another layer that was created, and so on and so on. But you're not, as a syndicator, you're not doing anything because the software on the blockchain is set up that way that is running all the computations itself and is distributing as is needed, right?
Absolutely. So we've got a cap table manager that manages all of this information. They're getting up to the minute stuff and they're keeping all that clear. Then we have the transfer agents that are making sure that we're completely compliant in our transfers, right? So that's settling one time when this happens, when this transaction happens, the cap table's updated. So I'm distributing the capital. It's going to exactly who it was supposed to be for that time period. And that's the biggest heartburn that syndicators have had in the past with creating liquidity in between the purchase and the sale in 5 years, right? So now we're able to let that transaction happen because it doesn't really need any of our computing power. None of our focus needs to be diverted to that. It's just simply something that happens built into this software. And this is the beautiful thing, right? So now you've created a secondary liquidity market for the GP as well. Right. Because we've got value that's locked up, right? We've got shares of this thing that are locked up that we can't get to. Now you're starting to talk about never really needing to sell the asset.
Exactly, this was going to say, yes.
You've got all these different things that are going on and everybody's happy the whole time. Mm-hmm. And you just get to kind of sit back and ride, right?
Wow, that's super sweet. Yeah, so no glitches so far, huh?
Well, of course, we've had some glitches. That's why we're the guinea pigs, right? This is why our asset is the first one that's going to be tokenized, and we're getting ready to tokenize the second one right behind it. And then you've got the lockup period, right? So nothing really attractive is going to happen for a while, but we're also getting ready to bring in one of our assets that we syndicated about 8 months ago that we're going to be able to put on the platform and bring back around and let people have access to that. So we're really the guinea pigs on all of these deals. And it's really going to be pretty exciting to see how this comes out, because the reality is it's going to create a lot of sub-markets based on what you could do or what I could do before being turned on its head, like crypto and like blockchain technology has turned the world of finance on its head. I think this is really going to turn the world of syndication around, because we're going to have access to liquidity and cap table management, and transfer agents that were beyond our wildest dreams before are now going to be normal and locked into the backside, and it's all going to be run by AI.
Wow. And plus this immutable records, more secure, right?
Absolutely.
Yeah, Absolutely. It's not just the paper trail anymore. And exactly. It's a better business model. But you think it's going to really happen?
We're doing it. We're doing it today. So we are actually, by the end of this month, going to have tokenized our first asset. By the end of the year, we'll have tokenized a second asset. And by the first quarter of next year, we will have tokenized a third asset that will then begin to trade by the middle of the second quarter of next year, where we'll actually begin to see that pinging around. And like I said, these are just the assets that I have. Okay. We've also got some other people that are bringing some assets to the table that are huge assets that are going to create a secondary market that I think is going to be a lot of fun, because as we know, people naturally have ADHD, right? They naturally have this high definition attention deficit disorder. They love the idea of day trading. They love the idea of doing these things. It's going to create its own little hybrid market because people love that.
Yeah, I agree on that 100%. So all these deals that you're going to have, they're going to be on a dedicated blockchain by itself, right? Because not necessarily is going to be 100% public, because it's a deal specific. Is that true statement?
I think so, because we are, your coin is your deal.
Right.
And that's going to come together on a basis of, this is what your thing is. That's going to lock in with your PPM to your smart contract. We're going to create your digital security. We're going to create your digital token that you can call it. You can do your digital token at a 10-cent fiat value. You can do it at $1 fiat value. You can do it at $1,000 fiat value, whatever you like, right? So we've got all of these different options that are going to allow you to do whatever it is you'd like to set this up the way you want, and then create the liquidity event in a year and start to have things happen from there.
Wow, it's a super cool concept. I seriously love it. I'm a blockchain enthusiast. I seriously love this concept. But thank you so much for your time today. I really appreciate all the knowledge and all the insight into the blockchain and crypto, especially in the real estate world. Thank you so much.
I appreciate your time, and thank you for letting me speak with your audience.